Okay, so good morning, everyone. Here is Ms. Sahar, the tutor for F6 taxation. So today we are going to have a thorough understanding of the Finance Act 2024. Basically, ACCA taxation exam is governed by Finance Act, and in whichever attempt you are appearing for, that Finance Act particularly for that year is relevant. So right now we are going to have a look at the Finance Act 2024. Now ACCA has given a very detailed article for all the students out there to understand actually how your taxation exam is like made and which areas are going to be tested out there. So if I just have a look at the TX UK variant out there, so let me get towards the areas of taxation. So one of the area is very important, that is the income tax. Now all of those people, those who earn, those who do their business, I mean to say who has their employment income, they have their self-employment income, partners, and some other chargeable persons out there have to pay income tax. It means all those people who have their income, they are liable to pay income tax to HMRC. That is the authority out there who collects the tax and then distributes it for their own purposes out there. Okay, so now how income tax is calculated. This exam is more about number crunching. Okay, so rates of income tax that are made by the HMRC out there. So all of those slabs are also presented in your exam. Okay, so you will be provided with the slabs, you will be provided with the rates. While preparing for your exam, you will have to practice it according to the rates. So all of these rates are placed in the Finance Act. So first of all, now income tax, how this is calculated, what are the dynamics behind it. So let's talk about it. So first, there are three components in income tax out there. The one thing is like your non-savings income, then we have our savings income, and then we have dividend income. So let's see now the first what is mentioned over here. Dividend income nil rate band has been cut from 1,000 to 500. These are like the changes from Finance Act 23 to 24. Now, if there's a person who is earning dividend of around 1,000 pounds, okay, previously what used to happen that 1,000 pounds were not taxed. Nil rate band means that this amount is exempted actually. No tax would be there. But now the changes are that from 1,000, it has been deducted to half. Now only nil rate band will be applicable on 500 pounds. Okay. So let's have a look at the rates. These rates will be provided in your exam, so no need to learn it, but you should know that how these are applied. So one thing which I will for sure just state over here, how the income tax bands are applied. Okay, before that, just let me make a mistake at first. Now let's say that your income is, for example, I have put the bands over here. We can do this thing in Excel as well, like just apply the formula, but I'm just going to tell one very important thing out there. This is a skill. It's a higher skill that is mentioned by the examiner. Now, for example, you have your income as 1 lakh. 1 lakh 1 lakh pounds, let's say you have it. Okay, and now in 1 lakh pounds, basically you examiner asks you to find out the tax liability, that how much is that. So now if we just have a look at the bands out there, so they are categorizing it into basic rate, higher rate, and additional rate. So first we have basic rate band, then we have HRB, then we have the additional rate. Now a student who doesn't know how to calculate, what will he do? He will say, okay, 1 lakh is falling under the HRB, like between these amounts. So he will put 40% over here and the answer will be 40,000. So he will take the wrong option in the MCQ, MTQ, whatever you will be tested with. So this is actually wrong. income tax bands do not work like this. They work, let's say that there is a glass, a bucket, or whatever container, and just like water is filled, let's say if I say that I'm dropping water into this glass, where will the water go? Will it like comes in, let's say this is HRB, this is BRB, and this is ARB. Where will water go first of all? Obviously, it will touch the bottom first, this side. It means that first of all, basic rate band needs to be touched. We have to calculate tax on BRB at first. So now let's say the BRB is 37,700. So first 37,700 multiplied by 20% needs to be figured out. Here some answer should come up. Okay, so students, let's calculate whatever answer comes up. You're supposed to write it over here. Then out of 1 lakh, then you will find out that what is the how much space is left. Then you have to actually tax 1 lakh. Let's say we have to tax like 1 lakh. Okay, now 37,700 is filled. How much space is remaining? So you will subtract it. You will subtract 1 lakh minus 37,700, whatever answer comes up, this is actually HRB. So this will be multiplied by 40%. Then we will say, okay, higher rate band has been filled, or whatever the income was has been taxed fully. So you are going to add this like answer multiply by 40%. Here an answer would come up, and then you will add those both. This will be called as your ITL. So this is how you are going to find out your income tax liability, and this is how your income tax bands are going to worked upon. Okay, moving forward then, if your income is let's say 2 lakhs, you are not supposed to do it like 2 lakhs multiplied by 45%. No, we will not do it like that. We will first tax 37,700, then we will subtract the remaining amount, let's say the higher rate band 125 out there minus, and then whatever amount is left will go into the additional rate band. So always remember this example, first bottom will be filled, then above, not directly over here. Okay. Then moving towards the second component of the savings band. So saving, how savings will be taxed like. So if you are a basic rate taxpayer, if your income is between £1 till 37,700, so you will be categorized as a basic rate taxpayer. So if you are a basic rate taxpayer, BRTP, and your saving is like 1,000 out there, so this is, you will be exempt. No tax on your savings. And if you are a HRTP and your savings income is let's say £500, so exempt. If you have it more than that, then whatever normal rates we have, it will be applied out there. Then dividend rate, just like we discussed it at the start, £500 is exempt. Additional one will be taxed according to the dividend rates. They also work like that. Starting rate of 0% applies to savings income where it falls within the first 5,000 of taxable income. So like your taxable income is, let's say total taxable income is 5,000. So starting rate like savings income, that 5,000 is out there will applied as a zero rate out there. So then we have like the personal allowance. Now personal allowance basically works as your tax reducer. It is going to reduce your income tax liability. Now for 24-25, if we talk about the personal allowance is 12,570. So now let's say if my income is 2 lakhs, for example, so sorry, let's not take this 2 lakh example. We can take, let's suppose if it is like 60,000 is my taxable income. Now, what will happen when I'm going to find out my ITL? So basically, I can subtract the personal allowance provided by the tax authorities to me. So we will subtract this, and whatever answer comes up, then that figure will be calculated for ITL. So then there are some more implications, some limits out there for personal allowances as well. That will be discussed later when we will have like more examples to do. So right now, if we just look at this example, for the tax year 24-25, June has a trading profit. Now trading profit means that this is actually her income of 184,000. Her income tax liabilities. Now, can you see this personal allowance is zero over here? Why is it zero? Why is this not 12,570? The answer is mentioned in this explanation. Now, let me explain this thing. This is gradually reduced to nil where a person's adjusted net income exceeds 1 lakh. So over here, it's exceeding 1 lakh. So adjusted net income is calculated. Net income, like whatever is the total income less deductions for gross pension contributions. This is obviously a separate topic out there for pensions, but let's say just doing it for the sake of a question. If this pension amount is mentioned, we are going to subtract that. And if my taxable income, adjusted net income exceeds 1 lakh, so then my personal allowance will be reduced. Okay, that's why over here it is mentioned as 0. These are some special cases where you have to take care about it. So anyway, moving forward towards the taxable, so let's see how the bucket is being filled. First, 37,700, just like I told. So it is taxed at 20%. The answer is 7,540. Over here, we can also put it like 7,540. Okay, then 87,440. How we found out 87,440? Basically, whatever the bands has been, we have subtracted that to find out our rate out there. The space that will be taxed at 40%, 34,976. Then this is the one that is remaining additional. If you will add all of these things, it will equal to 184,000. So then additional rate out there. So this is actually my total tax liability. No personal allowance is available because your adjusted net income 184,000, it is exceeding like the amount out there, which is 125, 140. So that is how you're going to find out your tax liability. The point to understand is, do not look at the figure indirectly multiplied by the percentage just by looking at the bands. Bands do not work like that. You have to see that first BRB will be filled, then HRB, then ARB. That's how it's going to work. So thank you very much for this. We will continue it out right there with some other topic and some more questions. Thank you.